Thanks for tuning in to our weekly Mortgage and Economics segment. I'm Megan Abdelaziz, Real Estate SINY.com's Mortgage and Economics reporter. The mortgage rates came in stagnant this week. The 30-year fixed rate increased to 4.57%. The 15-year fixed rate decreased to 3.61%, and the 5-year adjustable rate increased to 3.61% as well. As there was not much happening in the economy this past week, there were only slight changes in the mortgage rates. For the economic data this week, there were only 3 reports released, one on the housing market, one on monthly sales, and the last on Consumer Price Index. The housing market report was released by the National Association of Home Builders on Tuesday, August 13th. This report dealt with the National Association of Home Builders and Wells Fargo's Housing Opportunity Index, which is about home values and housing affordability for the second quarter of 2013. According to the Housing Opportunity Index, the second quarter of this year dropped in affordability to 69.3%, which hasn't been this low since the last quarter of 2008. In the first quarter of this year, the index was at 73.7%. Along with their index, they also showed the median home price was up in the second quarter at $202,000. In the first quarter, the median home price was $184,000. With the mortgage rates getting higher and the home prices getting higher, it is harder for families to afford homes, which is why the index went down. The next report we looked at was on the advanced monthly sales for retail and food services in July, which was released also on Tuesday, August 13th, by the U.S. Department of Commerce. In July, the advanced monthly sales for retail and food services increased 0.2% from June to $424.5 billion. This number is 5.4% higher than it was in July of last year. The last economic data report was on the Consumer Price Index, released by the Bureau of Labor Statistics on Thursday, August 15th. According to the report, the Consumer Price Index for all urban consumers increased 0.2% in July. This increased due to the fact that most of the indicators that make up the index increased, except for the energy services and the used vehicles, which decreased. Since sales and prices are main driving factors for the economy, we could hopefully start to see the economy becoming slightly more stable in coming months. Now, as far as the financial markets, they had another bumpy ride this week. The Dow Jones had started at about 15,477 on Thursday, August 8th, and increased to about 15,498 by closing that same Thursday. By Friday, it started decreasing until the opening of the stock market on Tuesday, August 13th, when it went up to about 15,420 and continued to increase until opening Wednesday, August 14th, when it started to go back down. On Wednesday, the Dow Jones had closed at about 15,337. The S&P 500 had a similar ride, starting at about 1,693 on Thursday, August 8th, and ended at about 1,685 by closing Wednesday, August 14th. The 10-year U.S. Treasury bond yield had decreased slightly from last Wednesday, August 7th, to about 2.58% on Thursday, August 8th. It then went just a little bit further down and then came back up to 2.71% on Wednesday, August 14th. After looking at the economy and the financial markets, we took a look at the Mortgage Bankers Association's press releases. This week, there were 2 new reports, one on applications for new home sales and the other on their weekly mortgage application survey. Their first press release, Applications for New Home Sales Increase in July 2013, was released on Friday, August 9th. In this report, it showed that there was a 14% increase in mortgage applications that were put in for new home purchases. The average loan size also increased from $283,111 in June to $288,382 in July. The last thing this report mentioned was the estimated amount of new single-family homes that were sold nationally, which came in at about 481,000 for July. Their second press release, Mortgage Applications Decreased in the latest MBA weekly survey, was released on Wednesday, August 14th. In this week's survey for the week ending August 9th, it showed that the amount of mortgages applied for decreased after last week's results increased. Their market composite index went back down 4.7%, and their refinance index went down 4%. Since this report is released a week after the mortgage rates, next week's results might actually increase because the rates have been steadying out lately. The last thing we took a look at this week were the two reports released from Gallup.com. The first report was released on Monday, August 12th, and dealt with American satisfaction with the U.S. for August. This report was based off of a survey they took between August 7th and August 11th. The results they collected came back lower than they were in July. In August, 22% of Americans are satisfied with the way the country is going, and 75% are dissatisfied with it. These changes came more from the political aspect of the country, since the economic aspect has been somewhat steady. Their second report was released the next day on Tuesday, August 13th. This was Gallup's Economic Confidence Index report for the week of August 5th to August 11th. In this report, the results of their two polls on economic outlook and current economic conditions came in slightly more positive, creating a better economic confidence index. The first poll, Americans' Net Ratings of Economic Outlook, came in with results of 44% of Americans feeling that the economy is getting better, and 51% feeling that it is getting worse. The second poll, Americans' Net Ratings of Current Economic Conditions, came in with results of 20% of Americans feeling that the current conditions are excellent or good, and 32% feeling that they are poor. With these slightly better results, Gallup.com got an Economic Confidence Index of -10, up from the -14 it was at the prior week. As the economic data continues to get better each month, Americans should be gaining their optimism back soon. The mortgage rates next week will most likely be around where they are this week, since there isn't too much economic data that will be released by then. But make sure you check back with us each week at trendingsiny.com and here on YouTube to see where the mortgage rates will go next. Thank you for watching, and be sure to like us on Facebook, follow us on Google+ and Twitter, subscribe to our YouTube channel, which you can do by clicking the button under this video, and follow our blog at trendingsiny.com. Once again, this is Megan Abdelaziz with RealEstateSINY.com. RealEstateSINY.com is a full-service real estate brokerage located on Staten Island. If you are looking to buy or sell your home, you can contact us at 718-966-9669, and one of our experienced agents will gladly help you. If you simply just want to browse the latest listings or keep up with the market statistics, you can visit our website at realestateSINY.com.